Something happened last week that most people in finance completely missed. The organization that settles every stock trade in America, the one that quietly sits behind your 401k, your ETF, your treasury bonds, just announced it's moving to public blockchain. And when they said it out loud at Consensus 2026 in Miami, the room went silent. Stay with me. By the end of this video, you'll understand exactly why this changes everything. In the next few minutes, I'm going to show you three things. 1. Who the DTCC actually is, and why their opinion on blockchain matters more than any crypto influencers. 2. What their CEO said at Consensus on May 6th that nobody in the mainstream media is talking about. 3. What this means for you, whether you're an investor, a finance professional, or someone building a career in this space, this affects your future directly. Let's get into it. First, let me make sure we're all on the same page about who we're talking about. Most people have never heard of the DTCC. That's by design. They're the invisible backbone of the entire US financial system. The DTCC, the Depository Trust and Clearing Corporation, currently custodies more than $114 trillion in assets. That's not a typo. $114 trillion. Every time you buy a share of Apple, sell an ETF, or receive a dividend, the DTCC is handling the settlement, the clearing, the record keeping. Their subsidiary, the DTC, processes roughly $20 trillion in securities trades every single day. They are not a startup, they are not a crypto project, they are the plumbing of Wall Street. And they have just made a very loud announcement. On May 4th, 2026, DTCC made it official. They announced their tokenized securities platform, and they gave it a real timeline. Phase 1, July 2026, that is 8 weeks away. They begin limited live production trades of tokenized real-world assets. Phase 2, October 2026, full commercial launch. What does this platform actually do? It lets firms take securities that are already held in DTCC custody, stocks, bonds, ETFs, and represent them as digital tokens on a blockchain. And here's what's critical. The underlying assets don't move. Your investor protections don't change. The legal structure stays exactly the same. What does change is how ownership is recorded, moved, and settled. Now, who's involved? This is where it gets serious. Over 50 institutions have shaped this platform through DTCC's industry working group. I'm talking about BlackRock, Goldman Sachs, JPMorgan, Bank of America, Morgan Stanley, Citi, NASDAQ, NYSE Group, Franklin Templeton, State Street, Charles Schwab, Wells Fargo. But here's the part that should make your jaw drop. Sitting right alongside those TradFi giants, Circle, Ondo Finance, Ripple Prime, Anchorage Digital, Fireblocks, Wall Street and crypto in the same room, building the same platform. The wall is coming down. Now here's the part that almost nobody covered, and this is the real story. 2 days after that announcement, on May 6th, DTCC CEO Frank Salla took the stage at Consensus 2026 in Miami, and he said something that shifted the room. He said, and I'm quoting directly here, "We are working with some very good L1s right now, who are focused on the ability to process at faster rates, have higher resiliency." And then he explained why. "We process millions of dividend payments a day to feed to the industry. We need high-performance L1s to do that." Let that sink in. The organization that settles American capital markets is telling the world, private walled-off blockchains are not fast enough. We need public layer ones. That is a seismic statement. So, why does any of this matter to you personally? If you're an investor, the RWA tokenization market has already crossed $30 billion on-chain. Once DTCC's full platform goes live in October, analysts expect that number to scale dramatically. The assets most affected are the ones you already own: US Treasuries, S&P 500 constituents, major ETFs. If you're a finance professional, the settlement, custody, and clearing functions you work with today are being rebuilt. The institutions doing the rebuilding are already hiring for these roles, and they are paying a premium for people who understand both worlds. If you're building in this space, you just got the strongest institutional signal the industry has ever seen. Here's what I want you to walk away understanding. While the internet argues about meme coins and which token is going to 10x next month, the actual financial system is being quietly rewired. DTCC is not experimenting. They have a date, they have 50 institutional partners, they have SEC clearance, they have a CEO standing on stage at the biggest crypto conference in the world saying they need public blockchains to handle the volume. This is not the future of finance. This is the present. If you like the content, please smash the like and subscribe buttons so this content is surfaced by YouTube's algorithm to more viewers. My plan is to release videos Mondays and Thursdays. Monday's videos will focus on RWA tokenization and blockchain, while Thursdays will dive deeper on AI innovation and transformation and the AI infrastructure and the data center industry. I'm JoshLi's digital twin. While I'm in front of the camera, the real JoshLi is doing the research and creating the content. He will read all of your comments. While you're here, check out some of my other videos about the intersection of AI, blockchain, and tech in the future. If you want to see my previous video about Morgan Stanley's institutional wallet, the mainstreaming of on-chain wealth, click on one of the links now. I'll see you in my next video.